What is Fannie Mae? What is Freddie Mac? These are excellent questions. Let's get into it. I'm Dan Green with homebuyer.com. My MLS is 227-607. Our lender MLS 423-065. We're part of Novus Home Mortgage, a division of Exonia Bank. You can read more about homebuyer.com in the video's description, including our lending coverage and some very important disclaimers. Also, don't forget to hit the subscribe button. This channel is full of excellent homebuyer education, which of course is different from legal, tax, and financial advice, which you can better find somewhere else. I'm not a lawyer. This is a mortgage video. And when you're ready to check your eligibility to get your mortgage pre-approved, you can do that online in about 3 minutes for eligible buyers at homebuyer.com/fast. Okay, Fannie Mae and Freddie Mac. They sound similar, and they are similar in that they're two government agencies that perform similar functions in the mortgage space, and that is to ensure that banks, lenders, credit unions, groups that make mortgage loans, they have access to the funds they need to keep mortgage money abundant, available, and cheap to you. So here's the abridged story and the background of Fannie Mae and Freddie Mac, what they do, why they matter. And a lot of this information, by the way, it's industry knowledge, the kind of stories that are passed down between generations of people who work in the space, which I'm now passing to you, but it's also available to read about on Wikipedia, where I did a lot of fact checking to back these stories up. So we start in the 1930s, 90 years ago. And when you wanted to buy a home, you went to your community bank, except in 1934, the U.S. was in the Great Depression. Banks weren't really making loans except to people with very large down payments, like 50% or more, with onerous terms like, we can show up at your door and demand repayment in full anytime we want. And that kept housing in a spiral, with values heading down and with values dropping and foreclosures. And even then, the government knew that housing was the centerpiece of the U.S. economy. Housing stability, it promotes strong communities, which strengthen local businesses and local economies. That creates a positive cycle, which leads to more housing stability and so on. But during the Depression, banks were unable to fill their role as community lender. They had no money and they weren't making loans for housing. So the federal government stepped in. And in 1934, as part of the government's plan to end the Great Depression, the Federal Housing Administration was created, the FHA. The FHA is often confused for a mortgage company, but what it really is an insurance agency. The FHA insures mortgage lenders against homeowners defaulting on loans, similar to auto insurance. When an accident happens, insurance companies pay out. Same thing here. When a mortgage goes bad, the FHA pays out. And when the FHA launched, local and community banks could now get insurance for the mortgages that they were making in their local communities. So banks started making loans again. In that move, the creation of the FHA, it unstuck the U.S. housing market, and it helped to end the Great Depression. The FHA was so successful that when the GI Bill came up for discussion in Congress 10 years later, at the end of World War II, the Department of Veterans Affairs used the FHA as its model for the VA loan, which is a loan to help active duty and military veterans establish roots through homeownership, a very similar philosophy to the FHA. The VA, though, is an insurer and it's not a lender, it's a guarantor. The VA guarantees VA loans against default. So when a lender makes a loan that meets VA standards, if that loan goes bad, the Department of Veterans Affairs pays the lender back for the amount of loss from their loan. Similar to insurance, but not the same. And the VA plan worked really well, and it helped members of the military get into home ownership. So 10 years after that, the 1950s, when the U.S. Department of Agriculture wanted to promote home ownership in rural areas to support those local neighborhoods and communities, it reused the VA loan setup to create the USDA loan, which is a guaranteed loan product. Now, all three of these programs, the FHA, VA, USDA, they're government supported, but they rely on banks to make loans. And at that time in banking history, banks were all you had as a place to get a mortgage, to do a mortgage. Mortgage brokers didn't exist. Mortgage banks didn't exist. Local and community banks were it. And these banks could only lend as much money as they held locally in deposits. And that was limiting. It was limiting to homeowners, to banks, to the economy. So in the early 1960s, planning started for a pseudo-government enterprise that could facilitate bringing more money from outside of a community, into local banks, for the specific purpose of making mortgage loans. And this is the birth of the Federal National Mortgage Association, which we've come to know as Fannie Mae. Fannie Mae was created as a conduit. It was a go-between between banks that had a limited supply of deposits available to them and Wall Street, theoretically, where money is uncapped. Fannie Mae created a channel for money to make its way from Main Street to Wall Street. In doing so, it created a standard for mortgage lending. And it said to the banks, we want to uphold a standard for mortgages. So that way, investors worldwide will know exactly what they're investing in. And if you make loans that meet our standards, that follow our rules, we'll buy those loans from you every time you make them. And we'll replace the money that you lent from your deposits so you can lend again for another home. And then Fannie Mae said to Wall Street, we're here to deliver a standard mortgage product to you in bulk from banks around the country, diversified, and we will vouch for their quality. We guarantee that these loans will meet our standards. And those standards over time have come to be called the Fannie Mae Mortgage Guidelines. You may know them as conforming mortgage guidelines, as in conforms to Fannie Mae's guidelines. That's what conforming means. And the plan for Fannie Mae worked, and money moved from Wall Street through the banks to homeowners. Mortgage payments moved from homeowners to the banks and back to Wall Street. And because of Fannie Mae, banks can make more loans to more potential homeowners more quickly. Fannie Mae bought mortgages in bulk from banks, thousands at a time, bundling together into pools of loans worth millions of dollars. And then the rights to those payments, they were turned into new bond instruments that were called mortgage-backed securities. As mortgage-backed bonds and states and nations and pensions, they all bought in. The cost of borrowing came way down, homeownership rates went way up, and Fannie Mae was so successful that 3 years later, a competitor emerged, the Federal Home Loan Mortgage Corporation, Freddie Mac. Freddie Mac was a near copy of Fannie Mae, but it used a different range of guidelines. Investors who wanted Fannie Mae mortgages, they bought from Fannie Mae. Investors who wanted Freddie Mac mortgages, they bought from Freddie Mac. And this is how the market worked from the 1970s through the 1980s and 90s. And then in 2008, during the recession, the government consolidated Fannie Mae and Freddie Mac under one entity called the Federal Housing Finance Agency, the FHFA. And in the time since, the two groups have slowly taken on each other's character. Today, we don't really think of Fannie Mae and Freddie Mac as being all that different or offering so many different options. And from a homebuyer's perspective, Fannie and Freddie are mostly the same. Guidelines are similar, interest rates are similar, the options that buyers have for low down payment mortgages and home affordability loans are similar too. According to HMDA data, 81% of mortgages now go through Fannie Mae or Freddie Mac, and your next mortgage might too. They are the largest backers of the most common mortgage in the US, 30-year fixed rate mortgage, and you can start a Fannie Mae or Freddie Mac pre-approval anytime with any participating lender. In person or online, you could do it. Now you can learn about straightforward mortgage approvals on our website. It's at homebuyer.com/fast. I'm Dan with homebuyer.com. Remember, the pre-approved buyers do better. Happy home buying.